going on, everyone? We're going to take a look at Bitcoin's weekly chart. Now, today we're getting a little bit of relief, getting a little bit of a bounce in the overall markets, not only in the crypto markets, but in the stock market as well. So we had FOMC with Jerome Powell today, kind of, stepping back a little bit from such the hawkish kind of tone. Now, where does that lead us? Do we still have another leg down? Are we going to rally from here? Is yet to be determined. But what we can figure out is where are some potential levels that we could look to target on this dead cat bounce. And if this dead cat bounce fails to put in the absolute low, where could the market then be heading? And the reason why I like to look at the weekly time frame is because I like to look at these bigger macro levels. Now, we know that we had those highs sitting at around 110,000. Everyone was calling for 135, 150, 200 and beyond. And then we started to roll over. And if you've been watching your portfolio or you've been actively looking at the crypto markets lately, it's just been very, very lackluster and boring lately. So realistically, ever since highs that were put in at the end of January, right around January the 20th, we kind of failed to put in a new high, created this double top here, and then, started a little bit of a pullback, which wasn't too much because we were trading in this range for the better half of around a month to 2 months here since November the 18th when we really broke above this channel. But it really was the last month, about the last 4 weeks, that just felt absolutely brutal and absolutely painful. And on the weekly time frame, not only did we lose our 20-day moving average, but we came all the way down here to this linear regression now, which is a good thing. For me, it's a good thing because if I kind of look back in time here, going back to all of this consolidation, okay, this was a range that lasted the better half of 1, 2, 3, 4, 5, 6, 7, almost about 9 months. Okay. So we had a lot of consolidation for the better half of 9 months before exploding and putting in these new highs. Bullish. Now look where we've pulled back to. Okay. We've kind of put in this rolling top and we've pulled back to, if you actually take last week's low, if I was to drag a line across here, we actually pulled back to the top of that range. Now, I would have personally liked to see it get a little just down and dirty, just a little bit more deeper, because that would have really tested a lot of prior resistance here, prior resistance here, prior resistance here. But we kind of got back into this range here, or that truly breakout candle, which is completely fine. We also have some 50 SMA support sitting here as well. So very, very bullish. Now, we have started a little bit of a weak dead cat bounce. When I say weak, I don't mean weak in terms of strong or weak. I mean the weeks. So we're on our second week of a potential dead cat bounce. Now, I fully expect us to run into resistance very, very soon between now, the March the 19th, and let's call it March the 21st. And I expect that resistance to be right around 87,000. Between 87 and 88,000, I'm expecting us fully to get there. But here's the kicker. Before this week is over, and we've got a few days left, before this week is over, I would love to close over 87,000 and a half. Let's call it 87,500. If we can close over 87,500, we've got a clear shot back up to 94, 95K. Now, does that mean that the low is in? Absolutely not. But it's a good start to kind of putting in that low. And the reason why I would like to close over, 87K is because it would be getting us back over our weekly 5 SMA, and that would kind of limit the pullbacks to next week. Let's say we pull back, but we kind of hold this area here at these prices of around 82 to 83K versus holding prices that were somewhat down here of 79 to 81,000. Okay. So that would be a little bit more bullish for us going forward. And I would expect to see something like this, right? An immediate back test of this zone and then kind of a push into this 94 to 95K. I think that if we can close, okay, if we can close over 95, 96K, that might be the low, okay? Because the chart would play out something like this. Pull back here at the 95K zone, which would be back to right around our area that I'm looking to target at around that 90,000, 91,000. And then if we hold that, again, a lot of ifs, but again, only time can tell. And I'm not a fortune teller. I'm not a time traveler, but this is the way that I've seen patterns like this play out in the past. First objective, to close over 86 to 87K. Okay, I want to close over that. Second objective, let's push into 94K. Okay, now whether it takes one day or whether it takes a week to push into 94K, I don't really care. You just need to push into 94K. Once we do that, I want to pull back then until a price of, you know, between 86 and 90K. And if that holds, then I think our next stop is here right at 100,000, and that's going to be the break. Okay, that's going to be the break. That's going to tell you this bull market cycle is on, and we're going to absolutely explode. You're going to have a little bit of resistance here at this double top, right around 105 to 110, but that's the way that it could play out, and it could play out very quickly in a matter of 3 to 6 weeks. I think you could see a move where you're kind of just starting to explode through those all-time highs, and that's when everything else along the way is going to start to absolutely fly. So what we really need to see here, that's the bullish case scenario. Bullish case scenario, we take out 86K and we start working our way up towards 95. The narrative after 95 is to actually close over 95, 96K, at least for 1, 2, 3 days, and then we make that push into 100. If we can make the push into 100, I know that the pullbacks is going to come, but I think the pullback's going to be between 88 and 90K, and that holds. I think we're on our way. That's our bullish case. What's the bearish case? Bearish case is this. Let's say we push up into 86, 87, 88,000, even as high as 89. But let's call it between 80, let's call it between, I want to get the true price here. Let's call it between 87,500 and 89,000. If we pull into that area, you can get rejected if it wicks. Okay, if we don't get a weekly close over that area, it could definitely wick over that supply zone, and then next week we can start pulling back. You're going to notice that these Bollinger Bands are starting to contract. Anytime these Bollinger Bands start to contract, it's telling you one thing: big move incoming. I mean, big move. And does that big move have to be to the top side? No. Big move can definitely be to the downside. Let's just continue to go with the bullish case here and say that we are going to break this big move to the upside. That's what everyone wants to hear. If we do get rejected between 87 and 89K and it fails and it takes out this week's low at any point in time within the next 2 to 3 weeks, we will be going below 75K, and we will probably be en route to 70 to 65,000, which is going to back test all of this range down here, which I felt that we should have did on this 1 to 3 week pullback. We should have just got it out of the way, because it's going to prolong things, and it will prolong things. If this happens, it will prolong things at least another 2 months. Okay, at least another 2 months. What we want to see is we want to see this low hold now. I mean, if we're going to start to push up here, the big task is getting a close over 87K, right? What is this price? 87.5. We need to close over 87.5, and we need to absolutely start pushing towards 94. Once we start to push towards 94, then our pullback is going to be 87 to 90K, and then we can bust through the 95,000 en route to 100,000. And if we can get back up to 100,000 this time, that's going to be it. We're going to absolutely fly. Hope you guys enjoyed the video. Make sure to like, comment, and subscribe, and I'll catch you guys all in the next one.